right. Hello, everybody, and welcome to the stream. Of course, another Monday and another week of potentially pretty big inflation reports. We'll be talking about that and more as we cover the markets. Has everyone had a good weekend? Have you had a good one? I hope you have. Markets coming in green today, bit of green after fairly large selling. And of course, AAPL. We need to talk about Apple a little bit later on show. So as usual, we'll cover our long-term, medium-term, and of course, short-term concepts. We'll go over everything to do with the big stocks at the moment in the markets because there are some big moves. And we'll start off here with our longer-term approach concepts that we always do in our show. Make sure to subscribe for that. And of course, everything else. Big announcement, though, coming today, which is going to be, I like this comment, by the way, from Tyler Jones. Favorite time of the week, open the casino. Speaking of casinos, Tyler, yes, our conference early bird tickets are up. Links in the description if you're interested. And of course, we'll be doing that. We'll be over in America in September, late September. Check it out. Links in the pinned description if you want to come and visit and meet up with many other members of the community. We've got some amazing speakers from some amazing parts of America. And obviously, a lot of those guys manage a bit of money. So always good to hang out and to understand markets a little bit better with some shared opinions. Great weekend. And I'll be hanging around a little bit afterwards as well. So I'd like to catch up with quite a few people there. Anyway, let's go over the US 500 and get started. First up, it's got to do with the 20 moving average, doesn't it? So we've talked about two key levels. And we'll go through our long concept here. Is this normal? The answer is quite simply yes. Let's go over quickly some sentiment survey stuff. First up, sentiment survey's been coming in very green recently. It started to switch. We put in a high on the Nasdaq around the 19th of July. So we know that, of course, that was the high based on FOMO and sentiment. And we also know that we have a market that is basically coming into a volatile period. Effectively, August into usually the middle of October is one of the most volatile periods of the year. The other really high period of volatility is generally around mid-Feb into March, just so you know, so you're aware of the statistics, the way the markets usually play, and all of those types of things. More importantly, we know that we usually get pullbacks in pre-election years during this time, which is fairly normal. And I think the interesting thing about all of this is probably the stats. So let me go over to the stats here, which I've got up. And this is a good one here from Wayne. And basically what he's done is he's gone and he's made it adaptive to the current year. Now, of course, yes, it doesn't consider anything to do with the macro circumstances. It doesn't consider the potential of inflation and stagflation, any of these things. But the stats are the stats and they don't really lie. And I think this is a fair statistics. So effectively August into September, possibly some shakiness specifically in August. But when we've had a sell-off first week of August, it tends to lean into some also very bullish statistics for the end of the year. So I think that from the longer term perspective here, we need to understand an election is coming up. There's a lot at stake. And in general, markets will usually ride kind of the end of this year. Now, there are caveats to that. There's always the W word. There's always something to do with, you know, the markets just generally realizing that maybe earnings aren't so good. But I'm not sure we've got a catalyst like a black swan catalyst just yet. One thing we should be aware of is the volatility when looking at longer term aspects as well. And we want to know what's going on here. So what are our general concepts at the moment? Well, 20 moving average weekly is still the thing. And with the market coming through the daily 20, which we'll talk about in a moment, you have to think that's the target. Probably around 43.50 at this stage seems quite plausible. 4,400, we'll discuss that later on with our midterms. And I want to ask everyone in the chat, what do you guys think? Where do you think the market's going over the next coming months? How far down will it go? Will it just go back up? Let me know. Give me your numbers. Let's go with end of September. Where do you think the market will be while we read a couple of these things here? Biff Helm says, stock market has avoided July, August doldrums so far. Well, I guess, yeah, I guess. I mean, if you take from the high to where it was, that's 2.98. So the average sell would need to be at least 5. So that's correct, Biff, I guess. Doesn't everything depend on the 10-year bond? 4.08 is going up so fast. Bad for tech and for stocks. Great comment there, Kenneth. And yes, we'll be talking about yields in just a moment. Absolutely. Everything will depend on the fear of the unknown. So as we always say in this channel, one of the things that we always want to do together is always have some kind of learning experience, understand something a little bit better. You're absolutely correct with that comment. In general, markets fear the unknown. Once something is known, even if it's really bad, generally markets have already priced for that, and then they start pricing in optimism. Okay. So optimistic is generally the way markets will go unless it's super pessimistic. And there'll be overshoots on both ends. So you'll get an overshoot towards fear. That's why you get that Warren Buffett buy when others are fearful. And you get an overshoot of optimism, which we may have just seen literally about a month ago or just under a month ago. So the US 2-year yield is very important. Let's actually jump over to the 2-year. 5.1% is going to be a big deal. And US 10-year was often considered one of the best reads of the market. So people use, of course, the mixture of these two. You can use 3-month as well. Some other yields do matter. In general, it's the fear of the unknown. If this market is able to get through, let's say, 4.3% on the US 10-year, set an alert. Why? Because if it does happen, then it's going into an unknown area the markets haven't seen in some time. They're going to get freaked out by that. For the US 2-year, it's going to be 5.1%. And remember, we are pretty aware that most likely CPI will go up, but I'm interested to know what you all think. So let's have a look here at your expectations. I probably shouldn't have even given you my opinion on that yet if we're going to do a poll, but we'll jump on over to this 1 second here and we'll jump into the poll. While I set that up, if you do enjoy our streams, make sure to smash that like button. It does help us out. We're at about 75. If we can get that over 100, that'd be awesome. Okay, so let's go with will CPI core, this is a different question, go up? Not year on year. Up or down this week, okay? Let's have a look. Up, down. That's simple. All right. What do you think will happen with the core CPI? Because that's probably going to be the number that everyone's looking at. We'll see what everyone thinks in the poll. It's going to be a big deal. Some big moves over in the overall oil space as well, which is leading into that concept. So if we have a look here, this is a great comment or great chart to keep. Harbor diesel price increasing, US CPI year on year decreasing. Interesting. Some of the comments coming in about what you think in terms of reads. Reveal says 369. A few people are going 3,800, 3,900, 18% down. His name's Bob Down. We're not going Bob up. Bob down, 18% down. Thank you very much, Bob. I love that call. Al Giro, 30% down, 4,200, 450, flat. A few people going through different stuff. Yeah, so we're going to be wanting to use that. Here's a good read, though. Usually when we look at oil, if fuel prices are going up, then it's a good read on inflation. We've also seen this shipping figure that I put in the weekend video. That's another one. So for the long term, I guess you have to remain optimistic on markets. Generally, you will. Look, the Fed have come in. They showed that they weren't allowed to allow any banks to fail, basically, and they put the bazooka underneath them. The problem is, unless that changes, which it probably won't, then we're in a little bit of trouble. So that's going to be a bit of a problem there. Now, there is a comment here, and I just want to, there it is. So I just wanted to read this to you guys. So basically, this is a bit of a report. And it says here that in general, equities effectively made their readings. So if you see here, Q2 earnings snapshot, 421 members of the S&P 500 reported Q2 earnings. That's 81% of the cap so far. The bar was low, extremely low, for this earnings periods, and consensus expectations for the S&P 500 year-on-year EPS growth to fall by 9%. Amazing, we're going up, yeah, considering this. The largest decline since third quarter of 2020, currently tracking. So what's the market doing? It's forward pricing, of course. It's pricing 12 to 18 months away. If that doesn't come to fruition, which will have to come to fruition, the next earnings report and the earnings report after that, then we'll have a problem on the stock market. That's when you'll get your 17 times forward earnings, which is generally what an investor would be looking for. Currently, we're trading about 19.3, I think. So 19.3x, usually 17 or between 15 and 17 is a great level to be at. So earnings have been better than feared, with 55% of companies beating consensus estimates by at least one standard deviation versus the historical average of 48%, only 12%. Now, one of the things I mentioned to my private macro report I do, free trial if you're interested, every week, one of the things I mentioned here was the 70 basis points. This is a great way of thinking about it. So companies that are beating consensus estimates by one standard deviation, greater than one standard deviation, are only outperforming the S&P by 70 BPS. And this is in comparison to the normal 100. Interesting. Markets that are underperforming are doing worse, and markets that are beating sales targets, that means actually getting results that they want to see, they're the ones that are doing best. And I think that makes sense because as the market recovers here, you're seeing consumer discretionary, which was a beaten down market. In particular, if they're hitting sales targets, you're seeing them really outperform in the markets, Amazon and others. So there's quite a few that are coming through. All right, let's jump into the SPX. We'll close the poll early. There's no need to see what you guys think. You're all voting yes. 75% of you believe that we will see a spike in inflation this week in the core, not the year on year in the core. So the expectation is 0.2%. You're predicting a spike up. So when we jump over to the SPX and we go to the daily, we've got some gaps to fill. And most notably, we have a gap here at 44.40. Now, 44.40 just so happens to be pretty much the previous little high over here. And that seems like a logical conclusion for the S&P 500 later on, maybe this week, maybe sometime in the next 2 weeks. But it seems pretty likely we'll get there. The next gaps, because there are quite a few, there's plenty behind that have been sitting. Things like 42.22. And then, of course, we've got other ones such as here, 41.13, et cetera, et cetera, et cetera. So we have a lot of those. But if we look at the structure of the S&P 500 over the medium term here, so this is the next 1 to 2 months, we have seen a swing change. This is a big deal. I mean, we're seeing something we haven't seen in, when was the last time we really saw a swing change? I guess we could argue we saw one here. So that was about 200 points ago. And we haven't had one since. That was a little swing change. This is completely different in structure. This is literally a market that's gone a high, a low, built a base. We've got another higher peak that just so happens to mark itself with the 19th on the US 100, the Nasdaq. Then we've seen a switch, which comes up and then, of course, rejects through. So, yeah, it's a pretty big deal. Swing turns are not that common. But we can go through both the bull and the bear case scenarios here. For the bear case scenarios, you guys need to be marking out quite a lot around 45.40 and everything to do with this recovery right now. Basically, if this market is able to get above this high here and close, it's probably going to continue on and even make maybe an all-time high. It's very possible. That would be a change of trend towards the bull side, and it would be, in many ways, another kind of broken kind of bear sell. There are some other areas that you could look for, such as this over here. We could be looking somewhere in this area here in terms of structure. But yeah, in general, I think that the market's put in a new low. It closed near its low, pretty much on it. So it means that rallies should be caught by sell demand. And I think a key level for us all to be watching this week, whether you're a bull or a bear, is going to be around the 45.40 zone. So that's going to be key. Where does it go from there? Well, if it does rally up to that point, we're thinking 4,400, 44.40 seems very plausible. Fill that gap, get back into the demand structure, possible bounce from here. Another one would be 43.50. That's another key level. And I think they're the main ones. There's not too much stopping it here. Even though there's a gap fill, there's not too much stopping this big rally until you get into that demand. So you're looking for a new low this week, guys, 44.75. That should push to 44.40, if not 4400. If we do rally through 45.50, I think we're probably moving a bit higher. And that's from a medium, maybe even a scalper's, day trader's standpoint. Over the medium, you would have to think that the next 2 months bring volatility, therefore bring more likely some tumultuous potential bear kind of market stuff. But yeah, those are the structures that I'm seeing. It's the same thing across the US 100. You can see here some big changes of trend. A market that did come down near the low, bit scary. It didn't make a new low for the bears. They certainly wouldn't have wanted to see it go bear low. 15K, the next target on the Nasdaq, should we clear this level. Of course, bulls, all you really care about is taking out that previous high. 15,526 is the level that we're looking at. Got plenty of individual stocks coming up today as well, along with our thoughts on gold, which is preparing itself right now for a pretty big week. And then, of course, we've also got our discussion on oil as well coming up. Here's some comments from you guys in the room. Let's have a look here. Wait. That's correct, Travis. You said you keep citing the cost of fuel as an indicator for rising core CPI, but core excludes food and energy. Yeah, I know. That's why I said core over there. I'm saying year on year is going to go up. That's why I selected a different part for the poll, man. All right, let's have a look here and see what your comments are. Down, there's still lots of dumb money on the sidelines. Once that comes in, corruption will turn things on their head and make sure smart money wins. There we go. Thank you very much, Mia. Things here, prices are going up and up. Yeah, that's true. Will Fed cook the CPI? Interesting comment. You guys think we're going down below 4,000, then you're delusional. Mega caps are too strong. Earnings are great. That's from GRT Cara. Thank you very much. So, yeah, I think, look, the problem is even if the CPI year on year is up, let's say it is, how does the market react to that? The problem is you don't even really know. You might say, oh, that's a negative to the market. Does the market care? How is the market going to go with that? Of course, we always say patience, react, don't predict. So even when you do have a prediction, maybe you think the year on year is going up, then that doesn't necessarily mean that the markets will just get smashed. Really, the key here is probably what happens with the yields, as was mentioned at the start of this show. US 2-year, US 10-year, that's going to be a big one. Also, what happens with bonds? Well, of course, if we see yields increase, we're going to see bonds dump off. Junk bonds in particular are something we'll be looking for. So, yeah, look, the Nasdaq's got a nice little turn on it here. Interesting levels, great price zones. That's really all you can ask for in a market like this. So you've got to just say, well, do we have opportunity? The answer is, I guess you do. US 2000s. This is an interesting one. Very strong market. We've seen inflows into this market here. And what that means is that this market's holding a bit better than the others. 2000 is, of course, the critical zone, which we'll look at in the weekly in a second. And this 1947 is the demand. So buyers are buying this. Sellers have continued to kind of dump that 2000 level. And we've got a bit of whether it's a distribution or an accumulation, we don't know yet. But certainly if we breach through, we could go down to the most traded zone around 1896. It's about 150 points off. And from a percentage standpoint, from the low here, that'd mark about 2.68, which would also get us into approximately, I think, the weekly 20, which if you take from the S&P 500, which from this zone here would be around 4.21. So it depends which one's stronger at this stage. Of course, taking 4% off the US 500 should really take at least 4 to 5% off the US 2000, but it is holding a bit more resilient than others because of that rotation. We remember in the report that we have, and I'm pretty sure it's here, flows. You can see that small cap flows have really shot up over the last month. And I'll say this, when you have small cap or any flow come in, generally it remains sustained for a period, let's say 2 to 4 months. So you usually get a bit of a turn, and it usually holds up for a general period of time. And that's something that we always do look at. Once you get a sector rotation, once you get one of these big moves, that becomes quite important. Speaking of sector rotations, do we have a move into something like gold? Well, and also actually Chinese stocks as well. So like Baba, pretty good chart. If you look at it, it's not bad. If you look at JD.com, it's not bad. If you look at CQQQ, it's not bad. The problem with them, like we discussed last week, is that we don't have the stimulus. So it's making a guess. That's a big thing there. A few people asking, are we filling a gap today? In general, if you have a sell day, that closed on its low, while you do expect rallies to be met by sell demand, the key levels, we'll look at them later when we talk about the short term, man. But yeah, look, you do expect that gap to be filled. Whether it fills today or it fills the next session or something, we don't know that answer. We'd have to see the key levels get hit. Don't so much go for the gap fill. You've got to go for the levels. And in general, when you have edge on a market, that is, you've made a decision that you believe is a replicable trade, that's when you want to target it. And that's a big thing. Patience, react, don't predict. Something I talk about in our day trading masterclass a lot, or group mentoring, or anything that I've done in time, and everything I've ever spoken to big fund managers, billionaire fund managers about, or anything like that, is they all have replicable systems. Every one of them. Every great business is a replication strategy. That's really what it is. If you go, like, the best advice, if I was ever give any for a business owner, and are there business owners here in the chat? Anyone own a business here? Let's see if you guys agree with my analogy here. So I reckon the best thing you can ever do is you can go work in that industry. You don't have to work there that long, maybe 6 months, maybe 1 year, maybe 2 years, and you work for the best company in that industry if you can get your hands on it, or at least one of the best. You go in there, you figure out what they're doing right, and if you see a competitive edge in something that they're not doing very well that you believe you could do better, then you have an opportunity. You take the systems, you take the procedures, and you replicate it. And then, of course, you get that little bit of where you think the edge is, and you stack on that, and you just keep going. And if you did that, like, most people fail at business for a very simple reason. They don't do that. They just go, oh, I'm going to start whatever. Yeah, well, do you know anything about that industry? Do you know where your competitive edge is? Simple, and it's super simple. But yeah, I generally think that's the best way of doing stuff. Sometimes if you don't have a competitive edge, you're not going to beat them. So you have to have the competitive edge. Bob Down says OnlyFans. Is that your competitive edge, Bob Downs? LV Junk and Hauling. Thank you very much, LV. Wow. Let's give a bit of a shout out to LV Junk and Hauling. $50 says thank you. Thank you, LV. Being a great supporter of the show. Appreciate that, man. Thank you very much. Don't think you've got a question. He's got 2 thumbs up. Very much appreciated. I'll leave it there for a second. Thank you. Let's give him a shout out. A couple of claps if we can. Manufacturing artificial trees, says David. Yeah, so Oren's asking, do we fill the gap? Travis says here, high yield junk was up pretty strongly Friday. The market dropped 23 points because Amazon held it up. That's true. So junk bonds were supported by yields declining as well, which we'll get into in a second. Thank you very much again, LV. Let's go over to gold here, and let's talk about where we're at. So I do like gold at these prices. It is going to be incredibly susceptible to what we would say is pretty much hit a target of buy for a scalper here. Now, that's not a solicitation to do anything. It's just it's come back into my range zone. It's done a small time frame change of trend, and it's kind of come into a level. Now, in general, a market will then rally somewhere up into the highs. This will be where it starts to get questionable. Of course, stop losses would theoretically be below there. Again, not a solicitation to do anything. I'm just saying this is the way that usually markets would set up. And from a technical perspective, you'd be looking at this thing to kind of go back into these heavily traded zones around 1960. The problem that's going to be from gold is that we do have, of course, yield problems. If yields go past 5.1%, this week, I can't see gold really performing incredibly well. If markets go underneath, though, and we see like yields drop off, so these go 4.6 and this go 3.8, then I would understand that would be fairly decent for gold. So at least that's something I'm thinking about there in the background. Thank you very much again, LV. But John Galt as well, member for 10 months. Thank you very much. John says, any chance you could look at the smart versus dumb money charts? I mean, it's just an indicator, man. I wouldn't say it's very excellent. Probably can't get you it right now, but I tell you what I'll do. I'll write it down, John. I'll put it in the next video. Okay, man? So I'll get you a relatively up-to-date one, John. And thank you very much for being a member of the community. Appreciate that, man. And we'll get that one sorted. Smooth Brain. For $50, you can haul my junk anytime. Is that why you called Smooth Brain? Why have you got a picture of a koala, man? Are you hating on the koala? You saying that the koalas are stupid? Smooth brain. Thank you very much. No worries, Jan. Appreciate it very much. I have my opinions on the next 6 months, but this time I'll follow the price action and keep them in the back of my mind. Yeah, unfortunately, our opinions mean very little. As you probably do, most people here that most of you guys have been around in the investment and trading space for a while. Do you think it's better to follow people's opinions or follow price action data, statistics, hard evidence? What do you think works better in markets? Bit of fundamentals, bit of everything, kind of like all the hard data, or would you follow people's opinions? Thank you very much, LV. Appreciate it, man. Looks like the yields are dropping today. Started off strong, but selling off. Well, that's going to help gold initially anyway. But look, gold hit a critical level. We've been talking about this 1930-35 zone. We saw a little switch on the small time frames, and that could mean that we've got a little bit of bullish potential here on that chart. Got about 23 minutes till the market opens, so we'll keep running through a few other things. We are looking at weak dollar here, weak US dollar. We came into a pretty big weekly zone. You can see it tapped up my next green area. Obviously, there was another green area down here that we thought it could get to, and then it rejected that. Then we've seen it ramp here through the session today, pulling up the market, and then we've seen it kind of starting to do a bit of a turn. This has got a first time frame change of trend, as I call it, on it. That is a relatively significant level. The last time we got this was around, was it around there? Let me have a look here. Yeah, it was around in here. So we had one in here as well, and that just basically got smashed by news. So low got taken, rallied up. This would have been usually a level you would have targeted for a sell, and no dice. Over here, you've got another target, and here you've already had a very successful little trade. So again, it's just playing the odds, playing the stats, playing the averages, and kind of continuing to go with that. Here are some answers to that question that are coming through here. Smooth Brain says, have you ever seen a koala's brain? I've seen the koalas on my dad's farm, bro, and they are kind of stupid, to be honest. One of them fell out of a tree. Not kidding. Sophia Factor says hard evidence, stats, and hard data. Pure technical analysis, baby, says Shenko. Mitchell W says after going with opinion, the latter. And look at the charts without any emotion. Good one, Cam. Absolutely hard data. Just have a plan, like you said. Good. Plan's good. Joshua won't put that comment up, but pretty much, yep. Beneficial Learning says, and stock price to its value. Always cool. And then, of course, trend mostly, Nat Gas from XX, and a few others. There is no wrong answer, says Biff. Thanks very much, LV. All right. So, yeah. Are koalas dumb as pandas? I'm not sure, truly. A panda's stupid? I don't know. I thought pandas a panda's smart or stupid? I don't even know if koalas are dumb or stupid. But the thing with koalas is they eat basically a partial poison half their life. So, yeah, eucalyptus isn't exactly great for them. Let's continue to move through after we discuss the natural koalas and kangaroos of Australia. Is anyone actually from overseas? We have a lot of overseas audience. Have you guys been to Australia? I don't know. I'm coming to America. I'm really keen to meet a lot of you over there. But have you come to Australia? Let me know in the comments. Where have you visited? What did you like most? US oil supply. Yes. We are at absolute critical for oil, and it's not even funny. Now, I have stopped talking about oil recently, even though I know it's been hiking up. People have been telling me off for it. It's just because I don't really think that I had too much edge. It was playing an inflation-based increase that was kind of out of normal periods of time. So, well, it's been a great run. It's kind of finding itself at one of these levels. Now, traditionally, this would be a level where you'd usually see OPEC come in and say, ha, we're going to start more barrels, and it would push down as they could, kind of artificially get a little bit of juice in here as they've done it. I think they did it over in one of these other ones, and they do tend to like to push it between here and here to make a bit of money. Obviously, they'd love it up here instead. But yeah, this is kind of like a pretty fair zone for it. This is at critical, though, ahead of the inflation number. So if we breach from this level, Oil might start getting ridiculous. Like we're going 88 a barrel, even 92 a barrel is very possible. So watch the weekly close here for oil. It's going to be super important. Have that level up. Even if you don't trade it, just understand that if oil does get through this area, you're most likely seeing yields spike through those highs and fear of the unknown and the inflation / stagflation play start to come through as well. The smell of eucalyptus leaves are lovely. Just don't eat them. AJ Ford says, I'm coming to Australia this 1st of December. Well, welcome, AJ. Thank you very much for supporting the country, I guess. That's very cool. Hopefully you have a good time here. And yeah, make sure to go to all of the great places and stay away from... No, there's no bad places. Okay. All right, let's go over to copper. Let's have a look at what's going on with copper. Not too much. It's just declined. It did get a weekly fall in it. So we came in, I think, last week, and we talked about this daily level getting closed. It closed the daily, failed the weekly, false broke daily, and then just got smashed back down. Again, another one that I'd be watching this week into inflation. But I want to talk about single stocks. Other than our thoughts on things like, of course, the China market, which could be improving. I mean, I'll just show you a chart, okay? And I don't like this company, so it's not one that I would personally own. But if I was to show like these charts to you guys, so I show you this chart here, JD, okay? You know, you could make an argument that this is an inverse head and shoulders. You could make an argument that it's going to try to breach soon. You could make a pretty good argument that's basing and the volume is higher and these types of things. If you go over to another chart, again, not one that I like in particular, but you just bring these up, Barber, and you take a look at that. It has had an inverse head and shoulders. It has broken. It is a larger inverse head and shoulders. And if that was the US market, I'd be very, very excited, okay? If it was the US market. Now, of course, it's open to all sorts of things. We need to understand the reason why we like trading the US the most here, out of everyone here in the chat, the reason why we like the US the most is specifically because, let's face it, the Fed's pretty cool if you're a bull in the US markets. I mean, who's the best supporter of this US stock market, really? Well, of course, it's the Federal Reserve. So if it's a little bit rigged in the Federal Reserve's favor, because that's what they try to do, always push the stock market up, why wouldn't you want to own the most innovative country in the world stock? That would generally be the way to go. Melbourne over Sydney? Oh, no. If you're coming in from overseas, Sydney over Melbourne all day long. Sorry, guys. Even people in Melbourne will probably agree with that. You got to go to Sydney. Sydney's the one to go to. All right, let's go over here to AAPL. Melbourne's not bad to live in, but yeah, Sydney's the one to go to. All right, let's move over here and have a look at this. So you can see here, big sell-off on AAPL. Now, this is getting some relief, 0.41%. But this did some massive changes. Let's take a look at the daily, and we'll go through daily 20 on a bunch of stocks now. Good way of getting a daily 20 on, especially if you use TradeUP. You can actually jump a whole bunch of indicators on one. So you can get like moving average indicators. Generally, I like 20, 50, 200. So you can use a multi-ribbon. That's a good one. 100 would also be a good one. Maybe some people in the chat here can chuck in a few others that they like to see. Chuck them in. Also, smash the like button if you enjoy this content, guys. That would be good. So over here, we've got AAPL, and it broke through the daily 20 before an earnings announcement. Now, that was the first break this entire run. So let's just get that mark percentage out. This breakout here to all the way up to the top was 26.2% long. We've now rejected around, let's have a look here. Apple is now trading 8% cheaper than it was from the peak. And there might be a little bit more to come. I think it'll around 176 at least, if not 171. And what I'd be doing, what I'm actually doing here is I'm thinking about this. I'm saying, well, is it possible that Apple could actually reject a full 61.8 fib of this move, or even of this move? And that would be significant. I mean, obviously that would pull the markets down heavy, but that's a daily 20 break. Okay, let's look at some other daily 20 breaks that we've seen. US 500 daily 20 break comes back up to the daily 20 and rejects it from the bottom up. Okay, that's a big deal. That's why this is a key critical level now. This is how many times we've touched it. Once, twice, 3 times, 4 times break, rally, break. So it's clearly acting as dynamic resistance and support. It's a basic moving average, but it's still doing stuff. Nasdaq, let's have a look at the Nasdaq. The Nasdaq broke through multiple touches of the 20 on the way up, and then, of course, sells off. Now, if you use the 20 EMA, even more touches. Let's go through some more stocks here and have a look at how they've been trading. So let's go to something like a Meta. Now, Meta has closed once below before earnings announcements, but in general, it hasn't closed significantly under any of these levels. That's interesting. And also Meta, I noticed here, while it's up here 0.82 in the morning, this could be the first time it's actually going to weaken with 2 reasons. We've got a high, we've got a low, we've got a higher high. We also have a gap up followed by consolidation now for 1, 2, 3, 4, 5, 6, 7 days. If this market was to gap down and below the 20, I think that'll be significant for this market. And again, I probably think it's going to be a catalyst from inflation or something, some spook, maybe an early spook for the market for that. But it's a market I'm watching. And the reason I'm saying this is because while the 20 is not really the number, it's probably a 30 moving average in this case. This market has pretty much just been rallying off that level for around 252%. And it's really not had any significant pullbacks. You go to a weekly 20, have you seen that? Not once. Not once. Now, that's an aggressive trend. To put it in perspective, of most times throughout normal market conditions back in the past, you always see the 20 moving average getting hit. So it has not been hit. And if it was to come down to that right now, let's say Meta did, Meta would actually have to sell off about 16%, which is pretty big. Now, that's just saying if it does, we don't know. So these are just all we do know is AAPL broke through, and Microsoft has also decided to make a fairly big switch turn. So Microsoft, if you look at that on a chart, does that look like a topping market, or does that look like a market you want to buy? In general, that, even as my favorite stock, this is my number 1 favorite stock in the markets, it doesn't exactly look great. Is it on demand? Yes. It's coming down also to the weekly 20, so it's getting close to that kind of demand 20 combo. But that would mean that the stock market would fall at least another 50 to 100 points, if not a little bit more. So look, we're cautious here, and I think that it's the same tale as usual. There's a tale of 2 markets. You know, if you looked at something like a net, this market after the earnings announcement looks a little bit better. You've got here an accumulation. So this is just some individual stocks here as we go through some individual stocks. We've got some accumulation potential here. We don't have a weekly closeout. We did get a decent earnings that held about 7%. It's down 2 today. We also got a island reversals, very small island reversal back end here. Now, that doesn't mean it's going long, but if this thing breaks past 76.13, and even here it's kind of activating something, then it could go into a bit of a ballistic run. So there are stocks that are very close to breakout levels. And there's so many of these that are either live right now or getting close to that breakout zone. One I'm glad we did dump and stop talking about was PayPal. Ooh, did anyone hold this? I hope not. I hope not. Thank you very much, LV. Appreciate it. Yep, this is a good one. 2050 EMA, 100, 200 SMA. Good. Yeah, you want to use simples more all the time for the big long-term timeframes. And of course, you can use EMAs if you wish to for the shorts. What an EMA does, if you're not aware, exponential moving average, is all it does is it really just puts more weighting to the most recent price action, and it kind of grades it off. What that will mean is in these fast-moving markets, the 20 EMA and 50 EMA, because they're shorter, will put more emphasis on the recent candles. You'll get a much nicer kind of movement. Generally, I do prefer that. But when people refer to the 20, they usually mean simple moving average. What do you guys think about the euro US dollar? Yeah, we can have a quick look at that. We'll look at a currency here just to open it up. I'll show you a currency. Euro was showing a buy before. Let's have a look at it now. Yeah, so similar to gold, kind of dropped back down, took out a high here. This is a fairly interesting supply though. So it's a very similar trade to gold, really. We saw gold kind of rally, a drop into potential rally just then before. And then we've got kind of euro coming back down to a zone where you'd expect buyers to commit. Again, this is going to be the question mark zone. And if we do get through this area and we keep seeing buys, because look how big and important this area is, 101, 1.105, big area. And that will push towards, you would think, at that point, maybe even the 1.1135 highs. So this would be that next zone. So yeah, this would be important area. And then, of course, next zone we'd be looking at is somewhere around 1.11. Thank you also to the 860 people that are joining us here today. If you do enjoy the streams, make sure to smash that like button. It does help us out quite a lot. And that's good. Did I miss the Qs? We covered them at the beginning, but we covered, of course, the Nasdaq prices. You can convert that into Qs, no issue. How's Tesla CEO leaving? What? Really? Tesla CEO? I don't understand. How's that possible? Is that a lie? I don't know. I don't know what that means. Oh, CFO. I'm thinking, how does Elon leaving? I was just looking at it. I'm like, I didn't hear that. But anyway, CFO. Yes. So Tesla CFO Zachary Kirkhorn steps down, replaced by Vaibhav Taneja. I'm not sure. But anyway, yes, you are correct. That's only a few minutes ago, too. This is like, well, must have been like 10, 15 minutes ago. There it is down the bottom right-hand side. 9 minutes ago, Tesla CFO Zachary Kirkhorn steps down. So the market probably won't like that. They'll question it. Pre-market down 1.47. Look, I think this thing's going to 240. It makes the most sense. And it sat for quite a while, broke down. The price action kind of dictates it wants to go further down. You can see this action here, which is a wick coming off kind of that gap fill. So that usually means that, let's go to fill the drop. Let's go to the 240, figure out what happens there. Have I done gold? Yes, I have. Jabba, I did it just before. Is Tesla forming a head and shoulders? Interesting comment. I would say it's more of it'd be a pretty ugly one if it was. So you're saying that this is the left shoulder, this is the head, and therefore you've got kind of some right shoulder. In general, what a head and shoulders really is just some kind of distribution change or accumulation or just even a first time frame kind of style of trend change. So yeah, I mean, look, I like to think of it less as patterns and more as what we're doing is we're understanding the story of the market. And the reason I say the story is because think of it like a party. Somebody comes in early to a party and they're like, hey guys, it's all good. The party's pretty sweet. Everyone else gets called in. And then at the end, what happens? Somebody will say, hey, where'd John go? Oh, John left 2 hours ago, man. We've all been to that party. Yeah. And you're like, what the hell? He left? Really? Yeah. He said that Sarah's party was better and he walked off to Sarah's. Well, that happens in the market. The question is, can we see that people have left early? And if we can see that people have left early, it usually will show up in price action or entered early. So we do need to think about it like that. But we don't want to be left when it gets gate crashed by the cops or clean up the next day. There's no way we want to be doing that. PLTR entry price. Yes, well, that brings us on to earnings. So let's bring over the earnings whispers chart. So today, after hours, is Palantir, everybody's favorite random company. And this will be an interesting one because, of course, this is a stock that a lot of people have a lot of hope on. It's particularly owned by retail. In fact, have a look at this comment over here. I like PLTR and the quantum plays. So, yeah, this one and this one very much retail owned. Datadog, pretty good company this week as well. Twilio is interesting just because it used to be one of those favorites. Roblox, Disney, of course. We'll look at that soon. Alibaba, we know what we think about that one. Decent price action on it at this stage. And yeah, the rest. So the rest is mostly companies that probably most people here don't trade. Let's go over to PLTR on the charts, though, and take a look at that. So we'll load up PLTR. I will use this chart here, and we'll load in PLTR, and we'll have a look at Palantir. All right, so it's been a pretty good run for it recently. I did think we'd probably sell a little bit on Palantir and possibly come down to this price after this breakout. I've always liked Palantir's base. I actually a long time hated this stock at the old prices, but I love this base because it had all those right reasons. We broke out. We've been on an aggressive run. I don't know whether it can hold. This earnings is going to be a big deal for it. Of course, 18.28. It's gone up over 100% over the last couple of months. This is the next earnings following that back of that last earnings. If it can hold up, it's going to be a pretty big deal. You can see here again a gap and then an island style, similar to that meta from before. If it drops, where are the prices that you would expect? $16 would be an interesting demand, and then somewhere around this kind of 15 to 14 lows would be the next level, and then a really bad earnings will get you down to 12 again. But I don't think it's probably going there. It showed resilience. If we have a look at the weekly, the last week was horrible, and it comes off this little supply. So I do think someone's taken profit ahead of the earnings. I don't know if that's foreshadowing bad earnings. It's a guess. I don't really like to deal too much in guesses. I would rather have the ability to react to the market after the earnings. But you can see here the supply. You can see here the reaction. I would say someone sold. But how much isn't important. They could be just taking profit into the risk event, which is earnings. So yeah, I think the price of like $16 is probably a better area. Quill Owl, $10. Thank you very much. Aussie market next 24 hours, please. All right, let's have a look at the Aussie market, the XJO. Bit of a boring session today. Next 24 hours is the question. Well, if you were taking it based on the US market rallying, very tough because the US market's kind of in limbo lands. It could jump up about 20 points and it could sell from that point, it could jump up 40 and then sell off that point. So you have to kind of go with the market will, if it holds like this, of course, the market will have a little rally in it. This is a double top at this stage. So you could see like this being the key level, therefore maybe like a 73.60 into a potential fall in the markets. Yeah, that's what I would be thinking at this moment, Quill. Not really a market I have a strong opinion on at the moment. I obviously did the flip over here where I flipped everything and said, okay, I can't be short anymore. I was looking for 69.50 at that point. But yeah, since it's been up in here, I've just got a big question mark on it. And the reason I've got a question mark is I'm not really won over by this time of year. And I'm not really won over by the Australian market. If I was saying what looks good in the Australian market, contrary to popular belief, the banks have done some nice moves recently. So the big four have been doing quite well. Thank you very much for that. Ash Patel says PLTR weekly, good size negative divergence. Yes, there will be negative divergence there. Can you check Riven? Yeah, we can have a look at Riven for you. Again, Quill, thank you very much for your support as always. Let's have a look at Rivian. This one amped up pretty hard. And it's just been sitting there waiting for the news announcement. It can definitely go two ways. If I was like, say I was really bullish on this, even with a bad announcement, I'd definitely fib this one and wait for it to come back down to a 61.8. It's done a change of trends. So for most of Rivian traders, I would say that's a good sign. But I would like to see it kind of do a bad report, come in, do that type of thing. Price action replication is what I'm usually doing here. Can you cover Max Payne? I will cover it, but I won't cover it this week, Enki. There's no point. Max Payne is something we use on the 3rd week options expirations, and we've got some really good stats coming up. Not so much for August, but for September's 3rd week. Oh, yeah, it's going to be a big one. There's some amazing stats around September OPEX. Please create CrowdStrike. Yeah, we can do that. I think that could be showing itself as a good trade. So let's have a look at CrowdStrike if Net was doing it as well. So all these bug kind of cybersecurity stocks, that's a pretty bad weekly close. So that fell off. Weekly looks pretty bad. New high was met by selling. New high gets taken. Very big positive. There's that level that's going to go across. 140 is the kind of strong demand here. You just need to kind of get above the high. So at this point, it could be accumulation still, but you need to take that. But if you do take that in the future, it'll be really strong. So it's still in kind of like buy demand. Between this 150 and 140 is relatively strong for it. Can you share your thoughts on India? I've been hearing a lot of analysts turning bullish. They should have been bullish ages ago. I don't know why. I don't see anything on the charts unless I'm missing something. No, they're moving to China's not the great growth circle, and now we should go to the Nifty 50 and all these things. But look, let's face it. If you've been watching the Indian market for a while, it's just been the best to be in. It's the best market at the moment in terms of just raw growth. It has no pullbacks. It just beast modes. It has, very, very strong new tech sectors. And with this weird deglobalization, as we're seeing it, really the big winner of that is India. And it's pushing through. So, look, do I like buying it at this price? Not really. But yeah, it's been bullish for a long time. So I wouldn't say that's a new thing. I say they're late to the party on that. And that's usually when we start to hear about it. So do I like it at this price? No. Do I want it in the future? Yeah, I'll have some more of it in the future. If you go through, it's been bulling for a long time, though. Like, look at 2003. You want to see a better investment than most markets out there. Check out that, baby. 1,734%. Woo! Wow. And it's been on a great run since 2008 and a fantastic run since 2020. All right, let's go into the US 500 as we see open. We'll do crypto in just a moment. So for today, scalpers, day traders, everybody else, what levels are we looking at? So I think we are very focused on 45.35 to 45.40. We're super focused on that. If that gets broken, that's supply currently. That's going to be a big deal. Another level that we're going to do is pull a fib off on here. We're going to bring that one down. We're going to understand that markets could easily rally into around a 45.20 first. And anywhere in here is really where the bears should be sitting, if they're going to be sitting. I don't know if they sit where we are right now. We do have a gap open. So as we ding there over to the market being open, we've got a gap up. We have a 44.40 still open this week, and we closed on the lows. We got a lower low on the S&P 500 as of the close. So that usually leads into rallies such as this one being met by a seller. And those sellers, I believe, are somewhere in this area here. So I think that's going to be something interesting to watch for the Monday session as we bull here into the open. It's kind of like, think of it this way. There's going to be retail buyers buying because they got paid on Friday. They got the money. They're hyped for the week. Yeah, baby, let's go. Buy the dip, or BTFD, really. Then they get that market up here, and then someone says, oh, maybe not. Where will the buyers should get more committed is if you see something like this. So you get a breach of this level. That's first up there. US 2000 mark out the low of 1947. I'd put that as an alert later on this week. Look, it's weakening here in the morning. That's interesting because it's been stronger the last couple of days. And for the Nasdaq, you're looking at around 15,500. Anything up in here, 15,450, that's going to be big. Gold traders, we saw that bull before. We saw also Euro go bull just before. The big news on Tesla was the CFO stepped down, but the market seems to have recovered from that. Was down 1.5. I made a call on Bitcoin bullish last week. I now can't be bothered with that statement. Now, I already said this many times. For that type of trade to work, as it came down here, which is where I wanted it, it should have, especially after this double bottom, it should have bulled. Now, it gave many chances to get out at the same price. And that's what markets do. But while it could go long, in general, I want that thing to actually pick up fairly quickly when I see the right trend. If that doesn't pick up fairly quickly, it's over in my opinion. We move on to the next one. APH Foundation, thank you very much, $10. Thanks for everything. Hope you have a great week. Thank you very much, APH. Appreciate it. Very good. Thank you very much. Semi still strong. Yep, that's the chart of the week. We'll bring that in a moment. So Bitcoin, as you can see here, it looks more weak than strong with all these rejections. For you to really get more bullish on this, 30,400 needs to be taken out. Otherwise, move down to 28. I do like this market into the end of the year. So I guess our predictions are that we should get a gap fill at some point over the next 1 to 2 days. That's the downside. 4,400, 4,440 certainly open this week to the S&P, in my opinion. And that's some of the big deals that we've got. Thank you again, APH Foundation. All right, we've got some questions coming for a few other stocks. NVIDIA first, and then we'll go to semiconductors in general. So NVIDIA, look, it's still really strong. It hasn't fallen enough. If NVIDIA is going to get dumped, it'll be dumped heavy. I've said this many times. Negative 15% over a few days is what I want to see. Has there been one? No. Is the trend still up? Yes. Is there any change of trend? Let's go to the smaller time frames, daily. I would say not yet. Until you really take out 400, you've got pretty much nothing. So that's important. Let's have a look at semiconductors in general. Probably the most important chart this week. Semiconductors are up 0.9% today. You're looking for semis under 152. That will then solidify a double top pattern. And more importantly, the beginning of a potential rollover. And this is currently a melting up market. And it's dull. And with dull markets, often the saying is don't short a dull market. So we don't know that the most important sector in the US is falling. It hasn't yet. I will update everyone on the daily show, though, as much as I can as that goes through. Here are some other big discussion points. Agri, which is a stock that's going up here 46%. I don't tend to jump on these types of stocks. I just think they're more YOLO plays. I've said that many times. But if you did get into it, cool. How do you trade a trade like this? I often get asked that question. Generally, you target round numbers. So you can see here it stopped at 20 cents. No coincidence why it would do that. There's going to be a seller at that round number, just like there'll be sellers at 25 and sellers at 30. And you can see that's how it's traded in the past a little bit, targeting that 30, in this case, targeting the 20. I don't know why it's up. Doesn't really matter. The point is that that's usually the way you trade it. You do need to be cautious here. They can run for just a few days. And you can see with this stock, when it has really good runs, it goes on maybe like a day or so, and it's all over. So be careful there. Night Smiles website says, what happened to 140 on Tesla? Yeah, people give me crap for that one, don't they? So we can have a look, sir. So the Tesla call that they're talking about is this one here, 145 on Tesla. We end up getting 152. Look, I called that from up here. So you got to give me some slack. Look, didn't happen. Would I have traded it here bullish? Yes. Did I hit it? No. And yeah, that's fine. Again, there are always, see, a lot of people just look at Tesla, but what about the opportunities in Starbucks recently? What about the opportunities in PayPal recently? What about the opportunities in any other stock you can think of? Pepsi Cola has had an opportunity in it. There's plenty of stocks out there. If we get fixated on just one, let's say you look at Tesla every day and you love Tesla and you think you trade Tesla. In general, what you're doing is trade vesting. You might as well buy it, dollar cost average the stock, and keep holding it over time. And instead, what you should do is trade stocks you don't love. Do I love Pepsi? Couldn't care. Do I drink Pepsi? Occasionally. Do I care about, Starbucks coffee? I mean, frankly, I'm sorry, guys. Starbucks coffee sucks. Okay. I'm sorry. I've had it here in Australia. Maybe it's bad here, but it's pretty bad. Okay. Now, I'm from like the most snob capital of coffee there is. but yeah, I mean, to me, it's not so good. Anyway, do I trade it? Hell yeah, I do. And do I think I can see why it makes a lot of money? My God, even in Australia, there's people lining up paying those sweet $8 coffees. Thoughts on TAN? My thoughts on TAN haven't changed from the video. So I'm looking for TAN to most likely weaken further, structure up somewhere around here. We saw a large transaction go through. That usually means a few more days, maybe a week of structure. But now we have to have our eyes on TAN. So yes, we certainly will. All right, a few people are agreeing with me. Starbucks is also bad in Romania. Melbourne has the best coffee in the world, according to Julie. Yeah, we've got pretty good coffee. OG Gary says Starbucks is garbage booty water. What's good coffee to me? A lot of the blends in Melbourne are really good. They're like mixed blends and single origin blends. I like a lot. I'm pretty into the coffee, guys. I must admit, I do have like a decent coffee machine. That's for sure. What about corn? I wouldn't do no corn there. We can't do corn, Bob Down. You know how I am with those things. Can't beat 20-cent instant coffee. Isn't it more like 5 cents, Mitchell? Recession will obliterate Starbucks until they change their business model. You reckon? I don't think so. I generally find that, look, recessions are really tasty for cheap for things like McDonald's, those types of stocks. Now, if you have a look at if you look at McDonald's in general and you look at that thing and you see how it's doing right now and how it has been doing, this is not a sexy stock, but it's smashing it. And that's because I believe there are a lot of people that are struggling in the world. And McDonald's is a depression stock. So it does really well off those types of things. Starbucks may be a little bit different, but it's pretty similar. Maybe I should go to Dunkin' Donuts. Actually, here we go. People in America, when I come over, which should I go to? The coffee shop, the fast food coffee shop. Which one should I go to? You tell me in the chat. Anyway, as we as I answer that question, or you answer that question, just a quick reminder: we do have our open early bird tickets for FX Evolution Conference in Las Vegas, Nevada, at the Wynn. If you're interested, guys, it's open. There is a pin message that is literally on the top right-hand side or somewhere in your comment section. And of course, there's a whole bunch of info in here. We've got the CMT on board this year. We've got a whole bunch of great speakers. I'll be speaking as well myself, some things that you haven't heard here in the chat. And there's plenty of people. So these guys have all done a lot. They're very accomplished in the industry. They are all really knowledgeable in different areas of TA, fundamentals, and of course, risk management, pretty much anything you can really think of. I'm going to be taking notes, so I think everybody else should be too. But yeah, it's going to be in September and end of September. If you're interested, be there. I'll see you guys at the Wynn. And there is also a discount code as well for the Wynn if anyone's interested in staying there. It's pretty good. It's pretty good. Not a bad discount at all. You should go to Tim Hortons. I think I've already had Tim Hortons before. Make your own Dunkin', Starbucks. Well, I'll try Starbucks in America, but we'll see here. You mean Macca's? Yeah. In Romania, I don't know why, but McDonald's is always full. Yeah, McDonald's smashes it overseas. Dunkin', hands down. All right, cool. I will try the Dunkin'. Yeah, very cool, Paul. I'll hit you up for that. That'll be good. All right. So anyway, this week is all about watching the yield. So let's just quickly recap. US 2-year yields 5.1%. We're looking for that plus. If we get a really bad inflation read, that should send markets falling down. Watch US oil around this price. 82 is going to be pretty important. We'll be looking at that. Look at this Apple. Look at Apple continuing to fall. Check that out. 1.33%. So that's about to hit that weekly 20 moving average. That's about another 0.7% away from. So the rest of the market's holding up, but the biggest stock in the world is getting sold off here. So that's pretty interesting. You know, biggest stock in the world getting sold off, taking the Nasdaq down with it, but the S&P doing kind of what we talked about, pulling up there. So it's RSP day today. Yeah, something sick going on in this stock. Definitely overpriced. 3/4, you know, analysts don't usually like this. 3/4 of negative growth or whatever metric they were looking at, EPS, I think, or something. Tesla now down 2, so a bit of a turn here. And yeah, as we said, we do expect the gap to the downside to be filled, but the S&P will be the one that's probably going to be the hardest hit. Didn't quite get to the 61.8 then. 45.17 would have been pretty good. So that's our thoughts. US 2-year again to watch. Semiconductors, watch them as well. So load up SOX or SMH. If that takes out the double top, could be on. And at the moment, yes, we have had official swing turns on the US 500, Nasdaq, not the Russell. German market also showing some signs of significant weakness swing as well. So rallies to be met by sell demand, at least from a technical perspective there. And it's all happening. Why? Because it's August and September, the weakest months of the year. It's nothing to fret about. If it does continue to get sold off, you've got to look for your opportunity. Thank you so much for watching. Thank you so much for subscribing. I hope you guys have been enjoying the daily show. If you have been enjoying the daily show, let me know any comments as well about things you want to see improved on it. I think I've done quite a few switches to make it pretty good. But what do you guys think before we leave? Do you like the daily show, how it's going at the moment? Ultimately, I make it for you. So if you enjoy it, that's good. Kopek says Dunkin' is trash, but I'd drink it. That's because you like the donut, yeah? The donut. What's your thoughts on Uber? I guess we can load that to finish. Tesla under 250. I want Tesla to 240. Uber looks really crappy on a chart from this level. Look, I think I stand to the same point I said last week. It looks like it was on its high. This was that level that I would have been taking profit if I was looking at it from a technical perspective, and it deserves to pull back a bit. I don't even understand this business. I don't even know how they make money. Is it a good time to sell Apple? Well, I don't know. What are you selling it for? Your investment? Not really. I think Apple's pretty good still. Thank you very much. Appreciate it. Thank you. Thank you. Background music. If you get a chance, can you check IEP? Yeah, I actually want to check bonds as well. Let's just look at bonds. Treasuries. Oh, treasuries are getting tasty, guys. Look at this, $96. Just bring it down. Just get here. I'm being super patient. Being super patient on treasuries. It's hurting me. I don't know. I have the itchy fingers. I want to I want to be faster than that. It's taken too long. High yield junk. Now, this is interesting. This is still up. So do remember, high yield junk holding its own while the market's falling off. But the big story of today has to be Apple continuing to get sold off. That was super aggressive. Let's have a look at IEP. Icon Enterprises. Now, I heard this got sold pretty aggressively. Poor Icon. Why is this so bad? I thought that he bought like a bunch of energy stocks and they should have all gone up. Didn't he buy like tons of it? I don't actually know what this is really. I thought it was his business. Yeah, that's terrible. Ugh. Do you really want to trade this, man? Why? Why would you go to this chart? I don't like it. I don't see much opportunity here, unfortunately. Love the consistency and early release times. Thank you very much. LV, I'm not sure what this is, man. Big div? Oh, big div. Look, okay, so big div makes a little bit more sense, I guess, why you might like it. I guess it makes it makes some sense. Look, the issue you've got is, yes, you're saying, okay, well, even if I get the div, if I collect my divvy and then it comes down a bit, it's still already at these lows. So how much lower could it really go here when it's already had this capitulation selling? I can kind of see your point there, and that's your argument. The only problem is, do you have like some kind of get out plan? And the issue is, I could see, look at this low here from 10. You know, the significant percentage decrease that could come through this stock could wipe $18 quite easily. That's still 3 plus. That's still $5 away from current price. You know, I don't know. I just think there are a lot of concerns with it, and sometimes collecting div is not worth it. But look, good luck. Investment long, yeah. I mean, it just depends on your stop. Short Amazon. Look, I'm not going to short Amazon from these levels. It hit my target. Shorting quality is not really easy. It's never easy. You know, we've seen a lot of strong shorts. I mean, that have kind of failed. And when you short quality, this is the target that I had. That's the third target. Admittedly, I thought it was weak here. So already, so what do I know, guys? This level here I thought was already weak. Then we had this big earnings, but I'm not stopping on investing on Amazon. I think Amazon is still very strong. I think that it benefits heavily in the autonomous world that we're going into. It's going to fire 75% of its staff. So I see it as a great 10-year hold, unless the government intervenes. That could be a bit of a problem. But yeah, look, is it at the critical resistance? Yes. 2-hour chart here, not much information, so we don't really have that much. I'm going to stick to the indices and to the other metals and stuff. So yeah, big story today. AAPL selling off here early. If that holds down, it's another weakness in the market. And yeah, we're looking at seeing whether we can get some kind of pickup eventually. But remember, swing turns are in for the Nasdaq, the S&P 500, and soon for the Russell 2000 as it starts to approach 1947. So yeah, most of the market's saying there's a bit more weakness coming this month, and it's all around the right time with the right amount of news, with the inflation. I'm looking for weekly 20s, guys, and that's still another 4% away. Thank you so much for watching the show. I appreciate each and every one of you so much. And yeah, good luck out there. And I hope you do very well. Amazon is retail. Yeah, but think about their back-end systems. They hire what's their staffing? Like 400, 500,000, something like that, people sitting in warehouses. You can't tell me that's not going to be absolutely smashed by robots. All right. Thank you very much. Bye for now. Ciao, ciao.